This is Crypto Update Chris with your latest crypto news update. If you're enjoying staying in the loop on the biggest stories in the crypto space, make sure to like and subscribe to keep up with all the action. Now let's get into it. Today we're looking at a fascinating development involving MicroStrategy, the software firm that has made a name for itself with its massive bet on Bitcoin. For years, MicroStrategy has been a poster child for Bitcoin adoption in the corporate world. Its strategy of converting cash reserves into Bitcoin has been a bold move, positioning the company as a key player in the crypto narrative. However, it seems like the market is now testing the resilience of that strategy. Despite Bitcoin's relative price stability in recent months, MicroStrategy's stock has taken a significant hit, sliding by nearly 40%. This contrast between Bitcoin's performance and MicroStrategy's stock raises some interesting questions. One of the main factors at play seems to be investor sentiment. Even though Bitcoin hasn't seen a major drop, the company's heavy reliance on the cryptocurrency as an asset has made it extremely sensitive to any shifts in perception about crypto's future. It's important to note that while MicroStrategy's Bitcoin holdings are often touted as a long-term investment, the company's stock is still traded in a traditional market where short-term pressures and concerns about profitability carry a lot of weight. This means that even small movements in the crypto market, or regulatory developments, can create amplified reactions for the company's share price. For investors who bought into MicroStrategy hoping to ride Bitcoin's wave, the current slide might feel like a wake-up call about the risks of tying a stock closely to a volatile asset. At the same time, there's a broader narrative here about corporate adoption of Bitcoin. MicroStrategy's strategy has inspired other companies to consider holding Bitcoin on their balance sheets, but its current struggles could make those companies think twice. If the perceived risks of holding Bitcoin outweigh the benefits in the eyes of shareholders, we might see a slowdown in the trend of corporate adoption. Comparing the focus of the two stories, it's clear that while Bitcoin's price remains relatively stable, its integration into traditional markets, whether through companies like MicroStrategy or institutional products like ETFs, continues to introduce a level of volatility and risk that's unique to this phase of crypto's development. Bitcoin itself is decentralized and apolitical, but when it's tied to a corporate entity or traded on traditional markets, it becomes subject to forces like regulatory pressure, macroeconomic trends, and investor sentiment. Another layer to consider is the timing. MicroStrategy's slide comes at a moment when the market is debating the broader direction of Bitcoin. While it remains a popular asset, its growth as a store of value has faced challenges from increased regulation, the rise of competing technologies, and a lingering perception of instability. For a company like MicroStrategy, which has essentially tethered its fortunes to Bitcoin, these headwinds amplify the stakes. Ultimately, this story is a fascinating snapshot of where crypto meets the corporate world. It's a reminder that while Bitcoin itself might be designed to operate outside traditional systems, its adoption within those systems is far from frictionless. MicroStrategy's journey highlights both the promise and the pitfalls of Bitcoin's integration into mainstream finance. As always, none of this should be considered financial advice. Stay informed, keep questioning, and I'll see you in the next update.